All right, good morning, everybody. Sorry, I got caught up making pictures for you guys and almost forgot to start the class. How's everyone doing this morning? Hope everybody had a great weekend. Enjoy the time off, relaxed, embraced. Good morning, guys. Good to see you. Jeff, good to have you back. Conrad, nice to have you. Doing a little look-see, guys. I don't know if you got the notes from John Novak, but man, he created the workspaces for NASDAQ, bringing it in, large chart, small chart, the exact same refinement process that we always talk about. Pretty cool. Good morning, Ziba. So I was pretty stoked to see that. Real excited. Excited. You're going to notice a couple subtle changes today, guys. Visually, there will be a few subtle changes, but there are really no changes to the plan whatsoever. A couple different words here and there, a couple different pictures being used, but everything that we do is going to revolve around advantages. Each and everything that we talk about is going to provide an advantage, and from those advantages, you will make a decision on whether or not to enter the market. I'm pretty excited about it, guys. I really am. It's funny. I get excited about new stuff, even when it's not new, just a different presentation, because it means that you're going to hear it in a different way, which means that we always increase the likelihood that something that maybe didn't click fully is going to click. And that always makes me happy. But before, before we get going on these indicators, looking at that simple plan, that's what we named the room today too. Indicator explanation and simple plan review. Guys, we're going to talk about what you're looking at and how to formulate it into the very simple plan, putting you in a position where you're able to win consistently, right? Giving you every advantage, allowing you to win, because ultimately that's the goal, right? If you could make $250 to $400 a day, and that's it, guys, that's modest and meager, right? $400 a day is a $2,000 week, and I want you to think about that. Simplicity can get you to your goals. A $2,000 week is an $8,000 month. And an $8,000 month, guys, translates into a $96,000 a year. And we're going to focus on a plan that keeps it easy, keeps it basic, and keeps you focused on the absolute best of the best, being patient, waiting for the advantages to be present so that you can realize your goals. But before we do that, forexfactory.com, guys, I do this every morning. I want to make sure that I'm not trading in the news. And I don't care what the news is. I don't care who is speaking. It doesn't matter to me what it pertains to. But news has the potential to create some sort of reaction in the market, whether it speeds it up to a point to where it's almost untradeable or where it makes it change direction instantly, pulling you out of a position. I don't want to be caught up in that little emotional response. So every morning I'm looking for high impact, these red boxes, medium impact, these orange boxes, and I'm also looking at the low impact if it pertains to my trading, making sure that I'm not getting in front of that market. Today is Monday, May 29th, and there is no news today. There's no major news releases. I guess everybody's taking one extra day off. And we really don't have anything until 10 a.m. tomorrow. But tomorrow morning, we'll go through this again. We're going to look at Forex Factory. We're going to talk about what's there and make sure. Oh, today is Tuesday. Ziba, thank you. Oh my gosh. I'm still in Central Time frame, guys. No wonder there's no news. It's yesterday. Ziba, thank you for that. That's a little embarrassing. Um, I'm still on holiday. Man, and I got like 9 hours of sleep last night. I'm full recovered. So let's do this again. Today at 9 a.m. It just happened. The HPI, the S&P Composite 20-year. But guys, at 10 a.m. today, we have high impact. High impact can move the market emotionally. It can create movement in the market that becomes untradeable. So at 10 a.m., write it down on a piece of paper. Have Siri leave you a reminder. I love doing that one, guys. Hey, Siri, remind me at 9:55 to go do anything other than enter a trade because I don't want to be in that emotional response. So, guys, that's news each and every morning. I lost a whole day on the week. I'm glad I didn't have an extra cup of coffee today. That could have been detrimental to everything. Once I check news, I'm going to bring you guys over to the education page. And this is really where everything happens. Guys, anything and everything that you need from Nexgen, you're going to find on this page. Everything that is on this page is also echoed, I guess is a good word, in the Discord channel. So making sure that not only are all of your answers taken care of through the education page. I just want to show this, guys. I want to give that Monday tour, right? From the Discord page, guys, anything and everything that you need. Links to the traders chat. And then the educational outline. It's laid out for you guys. It is accessible almost all areas. Even if you're on demo, anything and everything that you need to be successful in the beginning is available to you. And then there's some extra stuff as you become a client, as you move forward, as your chart reading increases. There's more tidbits to take you outside of that basic approach. But this class is all about simplicity. This class is all about the absolute best of the best, giving you the highest chance of success. And I'm going to click this button to start the education, right? Straight to the tutorial section. And guys, this is where the rules are explained. This is where the simple trade plan is explained. This is where there's a glossary of common terms. If you are in class, you're like, man, someone keeps saying FOMO. What is that? Well, that's the fear of missing out right here in the education or in the glossary. But the most important definition in the beginning, guys, is exactly what we're going to be studying this morning, and that's a high probability trend trade. And a high probability trade is defined as when each indicator on every chart agrees with the rules for the trade. And typically this is going to be when all the triggers are their strongest, no termination conditions exist. Hey, good morning, Jose. And there's no trouble spots between your entry and your target. Guys, this is the recipe for success. This is the one that if you are brand new, let this be your focus. If you're looking for consistency, kind of coming back, you got in, you learned your indicators, you chased a couple extra trades, and then you took a deep breath and said, you know what? Simple is better. Guys, this high probability trend trade, simplicity is going to keep you pointed in the right direction. Because when you learn this highest probability trend trade, it's going to teach you to read your charts. And that's really my goal. 20 days focusing on this one, guys. That's 1 month. 20 trading days focused on the high probability trend trade is going to teach you to read your indicators. It's going to teach you to read your charts, to open them up and understand where the market is likely to continue. We're going to use that continuation point for a high probability trend trade entry. Where the market is likely to go, guys, this is going to be your advantage when creating targets from entering that high probability trend trade. And you're also going to understand where the market is likely to stop. This can be a trend ending area on one of your charts, so you're no longer looking for that trend trade. But it also can behave as an anchor. These areas where the market is likely to stop is what we call a termination condition, terminating the trend. And the highest probability trend trade that you can take is the one that happens after a termination condition on the 13-2 chart, on your larger chart. And I'm going to try and change the language a little bit. I'm going to stop saying 13-2. I'm going to start saying larger for those of you that have been with me for a while. Because the reality is it's a 2 chart. It's a big chart gives you your information. A small chart gets you an entry. And looking for that high probability trend trade on your small chart because of the information that's happened on the 13-2 is your best chance for success. Ziva, you don't have your ninja. You did have a productive weekend. I love that. Watch some of the videos about tops and bottoms, HVA. The high volume areas are very interesting. I agree 100%. I use range charts, guys. Chances are you will use range charts, but in the beginning, we're going to focus on simplicity, right? The same way you might go buy a car and then accessorize it later. We're going to do the same thing, guys. We're going to get that best of the best. And then you're going to accessorize your trading plan a little bit, maybe with an extra chart, maybe with a higher time frame. But the focus for your first 20 days are finding entries, guys. And entries come from advantages. And there's three advantages that I want you to focus on, that I want you to commit to. A trade is nothing more than momentum. It is a clear path, and it's an entry area. And these three advantages come from three rules. And I'm going to give you this picture, guys. I'm going to give you so many pictures during the day. Take them, steal them, put them in your spreadsheet. These three advantages are going to happen on two charts. There you go. A little visually different, right? Not what we had last week. Your large chart is going to establish direction, momentum, right? Your areas. And it's a broad stroke of a brush. It's going to show the overall opinion of the market. Rules 1 and 2, the rules that provide momentum, the rules that provide the clear path, happen on your large chart. Once those rules are met, you'll go to your small chart. And your small chart is going to refine that broad stroke of a brush. It's going to pinpoint your area for entry. I need to spell check that. This is going to reduce risk. This is going to increase profit potential. And rule number 3 happens on the small chart, that area for entry. So guys, we're going to keep it 2, and I'm going to delete this picture out of the chat room. Please don't steal it because I didn't spell check it in the wee hours of the morning like I should have. So I'm going to get rid of that one, but the message is still the same, guys. We're going to use 2 charts. We're going to use 3 rules. We're going to look for the highest probability trend trade. And you're going to be able to do this really within the first couple weeks, guys. You're going to be able to identify the momentum that provides the advantage. You're going to be able to understand that clear path. And you're going to be able to build a foundation that's capable of winning within the first 20 days. That's my goal for you. And everything starts on your large chart. And that large chart has to have strong triggers. This is rule number 1. Rule number 1 says the large chart must have strong triggers. Strong triggers are defined in an uptrend when your background is green. Your small triggers, these solid lines, must be crossed up. They're above the large triggers. Both are angled in the direction of the trend with strength, right? Strength means that it's kind of vertical, that they're wide, that they're going up. They're not flat and lifeless. It's the space created between the small and the large that lets you know that the odds are favorable for the market to continue in the direction of the trend. So you're going to hear in class quite a bit, odds favorable momentum, guys. When your triggers are the strongest, when the space is created, the odds are favorable. And that odds favorable momentum is that first advantage that your rules are going to provide. In a downtrend, your small trigger lines break below the large trigger lines. Large trigger lines are wide. They're angled in the direction of the trend. That space created between the small and the large lets you know that the odds are favorable for the market to continue in the direction of the trend, guys. And I can't stress it enough. Whether you're taking a high probability trend trade, whether you're taking a different sort of trade, whether you're looking for entries, guys, the advantage of momentum is the one that pushes that market to the next key area. Insisting on it. Insisting on that best of the best look, those strong triggers, that advantage of momentum is going to create a scenario where your chance of success goes up exponentially. Is everybody comfortable with this, guys? That's about the quickest, easiest picture we could ever put, right? Strong triggers, strong triggers. When those small triggers work back inside of the large triggers, guys, this is a weakening of the large triggers. When you weaken large triggers, anything can happen up or down. You take away that advantage of momentum, guys, and this is something that's going to happen throughout the day. You're going to notice odds favorable momentum, different points in the day, and you're also going to notice anything can happen triggers, those weakened triggers throughout the day. You'll notice on this picture, and I think that this is a great illustration reminding you that patience is key. You may have strong triggers that become anything can happen, taking away that advantage. Anything can happen triggers tend to be a precursor to a trend change, right? You're noticing the momentum slowing down. When it begins to slow down, it may reverse. Ultimately provides odds favorable momentum, and look how the market pushes up. Guys, you can keep yourself on the right side of things by trading with the trend. You can keep yourself pushing in the correct direction by trading with that momentum. Fighting either trend or momentum tends to be disadvantageous. Anything can happen, triggers. There's your reversal. Odds favorable, pushes down. Indecision. Smalls are up, large are down, large are flat. Background's green saying up, triggers are red saying down. Guys, this is where the market's trying to figure out what it wants to do. If you commit to that first rule, you can keep from getting chewed up. You don't have to predict what the market's going to do. You can wait until everything agrees, pushing in the same direction, giving you that advantage. So guys, that's rule number one, strong triggers. Easy to recognize, almost instantaneous. If you go to your live market, what do you think? Strong triggers, right? Smalls below the large, large or wide, they're angled in the direction of the trend. Even if I take off every indicator and all we do is look at these two triggers, it becomes very easy to recognize. Small triggers begin to return to the large. Notice there's a little change in direction. Odds favorable momentum, the market pushes up. Is everybody comfortable with this look? Odds favorable, here we go. Anything can happen. There's your precursor for a reversal. Guys, when you have odds favorable momentum, that is your best look for buying or selling a pullback to Fibonacci on that smaller, faster chart. What you're going to see on your large chart are these tails, right? Or these wicks. Guys, this is a pullback on a smaller, faster chart. This is a potential entry for that highest probability trade, that one that gives you all of the advantages. And look at the distance this pullback moved with that odds favorable momentum. We're going to learn how to study this as we go through. You're going to learn how to recognize it, how to embrace the advantages, and how to have it work for you. So rule number one, strong trigger lines. Rule number two says termination conditions must be false. That means that no termination conditions are present. There's nothing in the way, nothing signifying that that trend may end, and that's going to provide you the advantage of a clear path. Once again, this is a large chart look. We're going to that larger chart, and we're going to look for areas that may reverse the market. And those areas may be Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, a cyan divergence low line. It may be a magenta divergence high line, a large chart midband if the large triggers remain a full bar away. All of these happen on that large chart, that broad stroke of the brush, letting you know that the market may be reversing, or at least has the potential when the area is reached. We're also going to look at a smaller chart example using divergences, those losses of momentum. But initially, everything that you do happens on that larger chart. And it's a simple process. Price must reach an area, meaning that price reaches Fibonacci support, it reaches Fibonacci resistance, it reaches 1-to-1s, those divergence highs and lows. But when price reaches an area, all you have to do is ask yourself, where are my trigger lines? If all the trigger lines remain above support, as they do here in the picture, support's likely to stop the market, guys. Termination conditions are true. You have lost the advantage of a clear path. And when you lose that advantage of a clear path, that market may bounce, it may reverse. It may reverse momentarily and then continue, you don't know. Or it may reverse completely. So recognizing, respecting termination conditions is going to create an advantage. Here's one using that divergence low. Guys, anytime the market creates a pivot, and a pivot simply means that it goes from down to up or up to down. If a pivot is formed and the market's momentum is waning, it's not following price, you're going to see one of these divergence lines. This divergence line prints somewhere around the second or third bar, which means that it isn't present at the time of the pivot, which is why we don't use it as a termination condition, because price is not reaching an area. But this pivot creates the cyan line to the right, letting me know that there was a loss of momentum. And then when price reaches that divergence low, price reaches an area, the trigger lines remain above, now it becomes a termination condition. And this is what we call a pivot stop out of a prior divergence, guys. On its own, very powerful termination. The market may reverse. When you couple it with Fibonacci support or resistance, one-to-ones, it becomes more powerful still. So the initial pivot, that initial line isn't a termination condition, but when price retests the line, the trigger lines remain above or below, you get that pivot stop out of a divergence high here. And when it's coupled with Fibonacci, it becomes very, very powerful. And this is a great time to add a little language to what you're doing. And you're going to hear this in the rules. Good top and good bottom, guys. What's a good top? What's a strong top? A strong top is a termination condition, right? Price reaches, triggers remain below. A termination condition that creates a full reversal. Your large triggers go from green to red. Your small triggers get below the large and ultimately create odds favorable momentum. Guys, this is your strong top. This is the termination condition creating the full reversal. You see it from a low as well. Price reaches one-to-ones. Absolutely no trigger lines break through. Therefore, it is a termination condition. It's not a strong bottom until this termination condition creates a full reversal, gives me odds favorable momentum. And guys, there's another one of those tails, one of those potential entries on the 5-1. Setting it up as the highest probability trend trade that you can take. The highest probability is the small chart trend trade that happens after the large chart termination. So I'm going to ask, is everybody comfortable with that basic recipe? What are we looking for? From a high, price reaches resistance, price reaches a divergence high. Here's the recipe for you. Price reaches an area, triggers remain below, it's a termination condition. There's one of those pivots, not a termination condition, but when price reaches it, the triggers remain below. It becomes a termination, an area that may reverse the market. And if you look at the picture, you see that it does. And then guys, on that same token, here they are from lows. We'll get rid of that one. Price reaches these one-to-ones. All the trigger lines remain above. This termination creates a full reversal. Therefore, it is a strong bottom. Price reaches support. Trigger lines remain above. Price reaches that divergence low. Trigger lines remain above. Guys, if you embrace that simple lesson, you're never going to have a challenge, right? These are termination conditions, areas that have not broken that may stop the market. No clear path is present. But when is that path clear? When both the small and the large triggers break through the area, we have a clear path. When price has not reached an area, we have a clear path. Trigger lines have gotten above resistance. Resistance acts as support. Support gives me odds, odds favorable momentum. There's one of those tails. Guys, let it be two things in the beginning. Give me 20 days where either price reaches, no triggers break, therefore it's not a clear path. Both small and large get above the area, below the area. Now the path is clear, you have the advantage. If you keep it simple for the first 20 days, guys, it's going to take a lot of stress out of your trading. It's going to really get you embracing those advantages. After your first 20 days, you're probably going to want to work outside of that highest probability trend trade. You're going to say to yourself, you know what? I've got the potential to make all the money that I could ever spend in the world, but I'm bored and I want to see more. And you're probably going to introduce your first medium probability trade. And I want to define the trade before we look at the condition. A medium probability trade is defined when most indicators line up for a trade. However, a small issue exists. It's imperative that you understand that it is a small issue. It's not several issues, right? One thing may be wrong because trading is about advantages, statistical advantages that have been proven through back testing, that have been proven through study, that have been proven through repetition to give you a scenario where a trade wins more than it loses, guys. So defined is when most indicators line up for a trade, however a small issue exists. This will probably be the vast majority of your trades, and when you're executing these, you have to take them and manage them assertively. Your ability to read charts will allow you to manage them assertively. If there's trouble in your way, you may take a portion of the position off at that trouble spot and reduce risk to a zero loss level. Guys, medium probability trades are not high probability trades. They're not going to be that trade that typically wins 70 to 80% of the time. But they will be trades with enough advantages to make you say, I'm willing to take a shot. Your first medium probability trade is going to be what we call a 50-50 trade. And a 50-50 trade means that 50% of your trigger lines have made it through the area, in this case resistance, but 50% of your trigger lines have remained below. 50-50 is not an indication of your chances of success. It's simply a visual representation. You could call this a straddle trade. You could call it a one above, one below trade. Doesn't matter what you call it, but what's imperative is that you understand that this area is not broken because small and large triggers haven't cleared it. So it has the potential to break with odds favorable momentum. That OFM, that odds favorable, is the key part to a 50-50 trade. If you take this trade, especially as a new user, it's imperative that you insist that there's no other issues on your entry chart, no other issues on your large chart. If you have weak triggers in an area with the potential to break, it's not as likely to break, guys. Strong triggers break things. Even here you can see that 50-50 scenario, ultimately resistance holds, or support holds. It overruns a little bit and then heads the other direction. And then here, that 50-50 look ultimately gives you a clear path. So that's all we're looking for, guys. We're looking for a clear path. We're looking for the advantages. We're taking those strong triggers. Rule number one on a large chart, we're taking those no termination conditions. Rule number two on a large chart, and when we have momentum and a clear path, we get the green light to start looking for one of those potential entries. But before I talk about those entries, I want to talk about one more termination condition that you'll see on every time frame, but you'll see it on your small chart first. What happens in one bar on your large chart may be 15 to 30 bars on a small chart. So you're going to see three divergences in the same price range, three losses of momentum in the same price range. It may terminate the trend. This becomes even more powerful when the small triggers work their way inside of the large. When you go from odds favorable to anything can happen. More powerful still, when that third loss of momentum, that third divergence prints, and that pivot is higher than the previous from a low, lower than the previous from a high. Guys, this is a look that you'll see on your smaller chart first, and it's going to help you identify change happening on your larger chart. Maybe the market has cleared all the areas. It seems to have a clear path, but then it just goes up without warning. Well, that warning is going to be visually recognized on your 5-1 in the form of three losses of momentum. And you'll see lows like this with nothing in the way, or highs like this, even with odds favorable momentum. And you'll be able to use that smaller, faster chart to identify that change, to keep yourself safe from a trend that may be ending. And you'll also be able to use this idea, these three divergences, to help you manage trades assertively. You'll be able to visually see losses of momentum. If I enter the market, if I'm in a short position and this happens, I know to exit my position. I know that the market may be changing. It allows me to preserve capital. It allows me to recognize that change. If I'm in one of those medium probability trades, it lets me identify trouble spots through losses of momentum. So this is an important one. You're going to recognize it on the 5-1. You're going to be able to use it to identify change on the 13-2. And it's going to help you recognize the advantage of a clear path, guys. Momentum plus a clear path, and then finally an entry area. And we're going to go to that entry area, but we're going to go to a smaller, faster chart. In most instances, this will be a 5-1 chart. If you're trading the NASDAQ, and I'm excited to show you guys my NASDAQ charts today. It may be a 13-2 chart on the NASDAQ, but it's your smaller, faster chart, whatever your two-chart setup may be. And when everything is up on your large chart, when the momentum is up, right? When the path is clear, rules 1 and 2 are met, this is the look on your 5-1. It should be strong to the upside. Nothing but green bars, nothing but strong triggers, smalls outside of the large. Your large trigger should be coming up like a shark about to breach. And rule number 3 says that you're going to use a limit order to buy or sell an area inside of favorable large triggers. Those areas can be fibs, they can be mid bands, they can be yellow 1-to-1s. But it's imperative that they're inside of those favorable large triggers. And this is going to be your window of opportunity. It's going to help you create recognition to pinpoint that area where the market is likely to continue. But since we are using a limit order to buy or sell a pullback, we need a pullback, right? We need that market to go against the overall trend. We need that market to fight the momentum, the direction. A tiny little push, and it begins with a reversal bar. So when the rules are met on the 13-2, I'm waiting for a reversal bar on the 5-1. And at the time of this reversal bar, this is where you will create your window of opportunity. Your window of opportunity is going to extend from the highest point of support, this mid-band, to the lowest point of support, those yellow 1-to-1s, inside of favorable large triggers. And if we define favorable large triggers, because you're going to hear it said a lot, favorable large triggers mean that your large and your synthetic are one on top of the other. They're overlapping. By having these two working together, one on top of the other, it will create that smallest window of opportunity. It'll allow you to have the least amount of risk getting into a trade. Guys, this is your best of the best. Look on those trigger lines. I'll give you the picture in the room. So reversal bar prints from the highest point of support to the lowest point of support. Your job is to put a limit order right above that highest point of support. Because the momentum is strong on the 13-2, because the path is clear on the 13-2, you're not anticipating a deeper pullback. You're not expecting that retracement to go way, way below with all those advantages. So right at the top of that window, the area inside of favorable large triggers, your highest point for a long, your lowest point for a short, we're waiting for the market to come back to us. And if it does, you're in that trade at 79.21. You're in that trade because the equation has been fulfilled, right? Your initial stop, it's typically 8 to 14 ticks futures trading. But it's important to have your initial stop where the market should not go. And where it should not go is below that window of opportunity, below those 1-to-1s, below those large triggers, guys. This is where, if the market does reach it, we no longer want to be in that trade, guys. And it's going to happen from time to time. If you're taking a high probability trend trade, and it's a trade that typically wins 70 to 80% of the time, mathematically, you're obligated to lose 20 to 30% of the time. It's a cost of doing business. It's a normal part of a positive equity curve. And losers are going to happen, right? Be prepared. But we're not focused on the win or the loss, guys. For 20 days, we're only focused on the execution. Making sure the advantages are present, making sure that the entry comes from the absolute best spot, and committing to this trade, trusting this trade, because you know that when those advantages are present, when the rules are followed, when the checklist has been met, this is a trade that typically wins 70 to 80% of the time. Because you wait for the pullback to the area inside of favorable large triggers, after the market pivots up, you can reduce your risk dramatically below that reversal bar. Because you wait for the pullback to the areas inside of favorable large triggers, your profit potential has been increased. And guys, this is your best of the best. This is the trade that has every advantage. This is the trade, if you give yourself 20 days to have this mechanical approach. If I have strong triggers, if I have no termination conditions, and if I have a pullback to an area of support or resistance inside of favorable large triggers, well then this is a trade that I'll take, because this is a trade that has been proven not only through your study, but also through all the study Nexgen has done. Guys, I've had statisticians in the mix run this over and over and over and do back testing on back testing on back testing. And it's rare that anybody gets below 80%. We say 70 to 80 because everybody makes mistakes, right? Things to keep in mind. Areas that have not been reached are targets. They're not termination conditions until price reaches the area. Does that make sense to everybody? If price doesn't reach this area, it's simply a target. It's where I anticipate the market to go. And my profit potential isn't this tiny little bit here, but rather because we buy a pullback, my profit potential increases exponentially. This is one of the things that new users go, but Mark, it's almost there. Almost doesn't count. Price reaches the area, and then we analyze the triggers. Another thing that new users get a little nervous about is these small triggers may turn against you as the market comes back to your entry. But I want to remind you that the 5-1, your small chart, is nothing more than a refinement chart, right? So when the 13-2 has the advantage of momentum, when the 13-2 has the advantage of a clear path, what happens in one bar on the 13-2 may happen in 15 to 30 on the smaller, faster chart. So it's okay if those small triggers pull against you a little bit, because that's what's getting you to your best of the best spot. I'll also have people tell me, but Mark, a divergence printed. I had a loss of momentum on my 5-1. Guys, remember, the only termination condition that we're looking for on a 5-1 is 3 divergences in the same location. Don't let a small chart talk you out of large chart advantages. It's a key part of what we're doing, of what we're looking for. And ultimately, you're just going to be looking for these advantages and taking that trade, committing to it. 20 days focusing on nothing more than the perfect entry. Because perfect entries create manageable trades. Guys, are there any questions about this highest probability trend trade? Are there any questions about momentum? And this is where I open it up to you guys, because I can't see you, right? Any questions on termination conditions, that recipe of price reaching the area? Trigger lines either break it or they do not, right? You either have a clear path or you don't. Any questions on identifying the window of opportunity, getting that best of the best spot where the market is likely to continue? Guys, this is your recipe. That's your equation. And this should be what gets you into a trade. Either your rules are met or your rules are not. It's only 2 options, right? And then you're going to develop trust, guys. I'm going to leave the areas off of this chart. This is NASDAQ, and I love this chart because it's large chart, small chart. It's odds favorable. It's no termination conditions, and then it's one of those tails, guys. And look at this. If I circle that tail, it pulls right back to resistance inside of favorable large triggers. And this is your best of the best look, guys. Your job is to take this picture, to circle that tail, to study historically, and to identify the advantages. And guys, right now we don't have the advantages of areas on there, but I'm looking at odds favorable momentum. Absolutely. No termination conditions? Absolutely. And this is how I want you annotating your charts. I want you to write on your chart, area of entry inside of favorable large triggers. Guys, use the words. This market pulls all the way back right into that resistance inside of favorable large triggers. Everything says down. Guys, it's easy to identify your window. It's one line inside of those favorable large triggers. Resistance hasn't made it yet at the time of the pullback. Guys, this is your best of the best. I need you to take this trade and I need you to share it to screencast. I need you to get it up into that cloud. And then you're going to go through the process of identifying and getting feedback, making sure that what you're seeing is correct, making sure that your read is correct. And you're going to post it in the room, guys, in 15 hours every week, live. I'm here to give you feedback on anything and everything that you do. Whether it's a question, whether it's a trade that you want reviewed, whether it's a lesson in management, even if you're beginning to look for a different trade. Hey, Mark, I know that you teach high probability trend trades, but I'm really focused on this momentum style trade. Here's my rules. Write your rules on the chart. Here's the trade. Can you double check me and give me a little help? And the answer is always yes, guys. 15 hours every week. Nexgen provides you live education. They are going to give you instantaneous feedback on everything that you do to help get you where you need to be. The next thing I'm going to do is I'm going to take this picture, and if it fits my rules, guys, this is your spreadsheet. This is your tracking sheet. This is where you're going to take every trade that you take, and you're going to put that same link right into your trade link. This is your picture. What type of trade was it? It was a trend trade. When did I take it? I took it on May, what is today, the 30th? And it's a Tuesday, I know that now. How did I feel? Guys, this is important. How you feel has a lot to do with whether or not you're following rules, especially when you know your rules. If you're breaking your rules, you may feel nervous. You may feel jumpy. You may feel bored, right? If you're frustrated because you missed a trade, that may affect it. And if you're confident or relaxed, you're probably following the rules. Guys, this drop-down menu lets you identify everything. Did you have a termination that created a full reversal? I sure did. Did I have odds favorable momentum? Absolutely, I did. Did my 5-1 have those same strong triggers that I'm looking for on the 13-2? Without a question. If you're using a range chart, fantastic. If you're not, skip this line. If you don't want to look at it, pull it over. That's fine, right? Did your first target get hit? If you followed the rules, chances are it did. Did your second target get hit? You know, maybe it did, maybe it didn't. And then what happened ultimately? I won. And any notes, and I like to put followed all rules, right? Followed all rules, I won, I was relaxed. This is what I want to do each and every day, is I want to fill out this spreadsheet. And if that same trade followed the rules 100%, if it was my perfect look, my best of the best, I'm also going to put that into my favorite looks pile. Every time my rules are met, I'm going to fill this out. Perfect NASDAQ short trade. It's in here. I can come back. I can study it. Guys, this is my personal spreadsheet. I have over 200 pictures of rules-based entries. You have a spreadsheet. It was given to you by Nexgen. You probably have about 100 examples already. I'm going to share my spreadsheet with you right now. If you're new to the room, if you're working on your entries, guys, steal my chart or steal my spreadsheet. Go through and look at these rules and look at the similarities in entry. Look at the advantages present at entry. Every entry has a management opportunity. There's a section for management. There's a section for recognizing patterns, right? An area for termination conditions. Everything is designed to create confidence and trust through repetition, guys. That's the educational path. So you're going to take those pictures. You're going to get them into the room, and you're going to get that feedback. You're going to study historically. NASDAQ moves, doesn't it? Right at the end of that move, end of the momentum, there's another one of those tails. Smalls are still outside. That was at 938. Did it give me a pullback to an area inside of favorable large triggers? Man, this market moves. Guys, to the tick. To the absolute tick. Your job is to establish trust so that you never miss this entry. Give me a Y in the room if you're with me, please. Odds favorable, no terminations. When those are in place, guys, life gets easy. When all your charts agree, life gets easy. Can't stress that enough. Isn't that true, Conrad? Guys, I kid you not, when I take a high probability trend trade, I couldn't care less what happens because I know that I have every advantage, right? I know that this recipe has been built. It's been fulfilled. Guys, I have 200 pictures of these entries. Out of these 200 pictures, guys, you want to know the truth? Look at this. I'll put losers in perfect entries. Why? Because losing a trade doesn't mean it was the wrong trade. It means that sometimes there's a cost of doing business. Sometimes I have the best trigger look. Sometimes I have the clearest path. And sometimes I have the most amazing entry, guys, and the market had other plans for me. I don't control that. That's not on me. My job is that if this sets up 200 times, I'm going to lose 40 of them. And I know that I'm going to lose 40 of them. But I know that it creates advantages that typically win 70 to 80% of the time. And that's what we're doing for the first 20 days, guys, is we're just creating trust. And to help you with that trust, to help you with that recognition, I've created a high probability trend trade checklist. Guys, it's a little different than the one I've been doing for the last couple months. I took the new material straight from the website, and we kept it without the 13.2 because that NASDAQ's a 34.5. But is the market coming from a good top or bottom? And if you're not sure what a good top or bottom is, look at this, guys. Right in the checklist I'm about to give you, there's a link to a video that helps you identify tops and bottoms. Where did that go? And there's a little note. You can take a trade without a good top or a good bottom, but manage tightly if divergence is true, if you start getting those losses of momentum. Did you have odds favorable, large trigger momentum on both charts, right? Did you have that small outside of the large, everything says go on both charts? Did you have no termination conditions? No area, or did you have an area inside of favorable large triggers, guys? If you're checking yes on every one of these, this is a trade that typically wins 70 to 8% of the time. I've just put this checklist into the room for you. If you're not using it, download it, print it out, put it on your desktop, grab the fattest crayon that you own, and start getting in the habit of putting check marks on here, guys. It's going to reduce stress from your life. The next thing I'm going to give you is the exact same checklist, guys. The exact same conditions, the exact same rules, but I stole pictures from the resource material, from the same stuff that's available to you, and I compiled it into one spot so that you can keep this on your computer. Use this as your Cliff Notes, right? This is your quick study guide to make sure that you're associating the looks with the rules. And then finally, guys, I'm putting it all together and I'm going to give you this. This is your simple trading plan. You'll notice that it's a little different than what I've been giving in. Feel free to take it, to upgrade it. Guys, this is an example of how to write a plan. This is not the gospel truth for everybody because everybody sees things different. Here's your checklist, defining your entry. Your first 20 days are defined for entries. Pictures of your entries, right? A little bit about your stop, typically 9 to 13 ticks when using that smaller chart, a little bigger on bigger charts. If you're using range charts, these are the ones that you should be using. A little note in there just to help you as you grow with the software. Profit target, first profits, 150 to 200. Guys, you'll notice that this is a little different than the 100 that we've been talking about, right? Why is it 150 to 200? Because you have every advantage on every chart, guys, and more often than not, you're going to hit it. Second profit target, 250 to 400. Unless there's a strongly trending market and lots of room, then you'll start to let them run. But guys, you're managing great entries, right? You're managing advantageous trades. You're going to exit trades with those 3 divergences on a smaller chart, right? Maybe you get a higher, lower divergence. If the small triggers are not inside of the entry, large and very high probability trade, Looking for disadvantages to manage out of a trade. Strong trending markets, hold through a divergence. If the market's been going up for the whole day, you're good. Guys, there's those 50-50 trades, even talking about how to manage those. Take half off at the first trouble spot, right? Previous highs or lows, previous divergences. Manage to break even. Get that first profit target, guys. It doesn't have to be a home run. And then define your daily goals, your mass grid. The daily goal is 400 per contract. Guys, if you're trading a 2-lot, that's an $800 day. That's a $4,000 week, right? And then there's that $16,000 month. Whoops, I missed a 1. Even 6,000 is not a bad month, but a $16,000 month. And you're looking to do this, guys. The idea for your first 20 days is to create a plan that teaches you to read your charts, that allows you to recognize where the market is likely to go, where it's likely to stop, where it's likely to continue, and use those advantages for the entry for the highest probability trend trade. This is a trade that's going to teach you to fluently read those indicators, but what it's doing more than anything is it's creating a plan that has been proven to win more than it loses. It's creating a focus for a set of rules that create very distinct advantages, right? Giving you the advantage of momentum, a clear path in an entry area, doing it with the simplicity of 2 charts, and all you need to do is practice. For 20 days, practice your entries. If your goal is to become a successful day trader, a confident day trader, if your goal is to make that $400 a day, that $800 a day, guys, this is your path. It's been proven over the last 20 years, really. It's the step-by-step path, guys, is you have to post your trades in class. You have to share what you're doing. You have to share the reads that you have, right? The entries that you take, the exits that you take. Get feedback, 15 hours live every week. I'm here for you to give you feedback on what you're doing. The first hour is spent on rules, making sure that you understand the advantages. Guys, the second 2 hours are no longer a lecture on rules. They become a conversation with you where I look at your charts. We talk about what you're doing. We look for opportunities to do it better. We look for opportunities to remove items from your trading plan there that may be a little troublesome. But we have this conversation every day to get you where you want to be. And the next thing is to use that spreadsheet, guys. Don't skip this step. Make sure that you can identify your best of the best looks, right? Make sure that you're talking to yourself about what you did, how you felt, how it relaxed. And the idea behind this first page, guys, isn't just to do it. It's not a chore to keep you busy throughout the day. Everything that I do today, I'm going to study tomorrow morning, right? I'm going to figure out what worked, and typically it's the rules that worked. What didn't work? Well, it turns out trading in determination conditions doesn't work well. What felt easy and kept you relaxed? Conrad will tell you. Following the rules felt easy, kept him relaxed. What felt forced and nervous, guys? You'll notice a correlation with breaking rules and a little bit of boredom, a little bit of nervousness, right? A little bit of feeling like you're hoping this wins. And a brief historical study each morning prepares you for the next day, guys. It prepares you to get in there, to stay focused on advantages, and it will accelerate the learning. The more pictures you take, the more you simulate, the easier it becomes, guys. You have to learn the rules for when it's okay to trade. That's my job, is to teach you the rules. Your job is to simulate your trades, to post those pictures in class, and make sure that you have the correct rules, that you're following them. I'm a huge fan of accountability, and what you're doing is you're asking me to hold you accountable for your trading plan, for your set of rules. So it's imperative. I have to stop using that word. I think I overuse it. It's important that you're writing your rules on the chart, guys. So often I get people, hey, Mark, I need help. What happened? Well, tell me what you're looking for. Tell me why you're doing what you're doing. Identify your advantages. Identify your entry. Tell me where you wanted to get out. And you know what? Tell me how you felt. Were you confident? Were you anxious? Were you nervous? Guys, there's telltale signs. If you put not odds favorable momentum, but it means that as you went into a trade, you knew that you had forfeited the advantage of momentum, right? Well, termination conditions present, but It means that you knew that you were trading in without the advantage of a clear path. And it doesn't necessarily have to be a deal breaker, but understanding your advantages, being able to verbalize them and compare them to a look on the chart makes repeating the process easy. Simplify. Going to focus on one trade for 20 days, learning to read your charts, focusing on the best entries. What's it look like? Guys, you have to study it so it becomes easy. I can tell you after 200 pictures of the rules met, it's easy for me. I know exactly what I'm looking for. And then go back and use market replay. Gary mentioned earlier today that he did a lot of replay over the weekend. He went back and retraded, fixed mistakes, took trades that he skipped, didn't take trades that he shouldn't have taken, right? Took all those pictures, get them into your chart, and repeat this process every day until you're always taking the correct trades. Guys, if your correct trades win more than they lose, you should be guaranteeing yourself that you can trade live money. Thank you, Jose. News in 4, guys. This is your path. Most of you will fight it. I don't know why. Who in this room has fought the path? I did. I fought it tooth and nail. It cost me $5,000 almost instantly. And you know what's cool is once I embrace the path and once I embrace simplicity, winning is so much easier, isn't it? Trading is so less stressful. My heart rate stays constant. My palms don't get sweaty. I've got a simple process, guys. Either my rules are met, right? And I know that they're met. Whoops, that was the wrong one. I know they're met because I have a checklist. Or they're not met. If I can't mark yes, then I shouldn't be taking the trade. And that's really what we're doing, guys. That's your first hour. We talk about the same thing every day for the first hour. So if you're still learning rules, guys, this is your repetition piece, right? Remembering that it's simple, that it's only 2 charts, that it's only 3 rules. Guys, trading is about advantages. This is a NASDAQ chart, and you'll notice that it looks like an S&P chart, and you'll notice that it looks like a crude oil chart. Guys, what I teach in this classroom are trades that work on every time frame, every market. I don't care if you're trading the NASDAQ, I don't care if you're trading Tesla, but they create a statistical advantage, guys. If a termination condition creates a full reversal, if the full reversal gives you odds favorable momentum, all you're doing is you're looking for an entry. Small triggers haven't made it through this fib, right? Large triggers are flat. I don't really have the advantage of a clear path, therefore I didn't look for an entry. Either the rules are met or they're not, guys, and this is your key. There's your S&P. Price reaches an area of support. Absolutely no trigger lines break through. I'm not looking for a short trade into this area, guys. I'm waiting to see if it breaks, and if it does, I'll continue looking. And if it doesn't break, I'll wait for a roll and I'll look for the market to go the other way. And this is your path each and every day. Guys, I'm going to take a short break while news prints or releases. I'm going to leave the S&P up. We'll see if it creates some movement. If you have a picture, post it in the room. I'll be getting back to all the pictures when we start the second hour. If you have a question about a concept, whether it's momentum or termination conditions, right? Post it in the room, guys. The second hour, the third hour are conversations, and I want you to lead the way. I want you to tell me what you need to be successful with the software, what you need to be comfortable with the software, so that we can get you there, so that we can get you clarity on all the concepts and put you in a position where you can start that path to consistency. Guys, I'll be back in about 5 minutes. This is the one where we go through, we're going to start talking about what you guys see. Tell me what you did. I want to show you the chat box on my screen here. Guys, I'm going to scroll up to the top of the day. So if for some reason I miss a question, if for some reason I miss a post, please do me a favor. Go, hey, Mark, I want you to go back. I want you to take a look at it. And then John Novak started out the day for us, guys. This is a 2-chart trend trade. This is a NASDAQ. And you can see the new workspaces. And guys, I'm excited about this. For those of you that like a little more action, John Novak's created a 2-chart setup for the NASDAQ. Guys, notice that it's not a 13.2 and a 5.1 because the NASDAQ is fast. It's a very, very rapid moving market. So he created a 34.5 still using Fibonacci. Guys, Fibonacci is what we do. And a 13.2 for entry, but he created the workspace that gives the exact same look, the exact same patterns that we focus on. Guys, you'll notice he has a termination condition that creates a full reversal. The full reversal provides odds favorable momentum, right? Haven't reached an area. And look at that pullback to an area inside of favorable large triggers. Guys, this is the kind of picture that I'm going to steal this one from class. I'm going to take that link and I'm going to my chart and I am going to paste. And I'm going to call this one perfect trend trade long. And I'm going to come back and I'm going to study it each and every time. Gary, do you want them for 7 or for 8? 8 may be on the installers already. For 7, I downloaded these. He gave me these this morning. I'm going to share them with you. 2 charts, guys. Big chart, little chart. There's the zip files for the futures, for NASDAQ, and for the templates. So Gary, just download those, save them, and you'll be good. But it's a high probability trend trade, guys. It's every advantage. All charts agree. The best of the best, and a pretty effortless and easy winner. And then the next picture, also posted by John Novak. There's his easy winner, right? And then weak triggers, giving up that advantage of momentum, right? Multiple divergences, giving up that momentum. And then if he incorporated a range chart on this one even, market flow reversals from the trouble spot. And guys, he annotated a chart. Notice that this isn't a trade. This is nothing more than chart reading. It says price goes lower. Now you have to wait and start the entire process over. Now you have to wait for odds favorable again. Now you have to wait for no terminations again. Now you have to wait for an area inside of favorable large triggers. Wait for the rules to be perfect or it's just a gamble. Guys, I may take this same picture with all this amazing information, open up my spreadsheet. Once again, we are going to do this, and we're just going to call this chart reading, right? Going to put it in the chart reading section. And I'm just going to call this perfect or no trade, reminding myself that waiting for advantages helps. So the range, let's take a look. Finman. He's using, it doesn't show it. I want to say it's a 21 range, if I'm not mistaken. I want to say it's a 21 range chart. Let me see. He just gave me another picture and it doesn't show. But I'm fairly certain it's a 21. If you want, Fenman, you can always go over to Traders Chat. John's probably over there talking about it. You'll either be able to see one of his NASDAQ trades that has the range showing, or you can just ask in the room, and he's more likely. But I'm dollars to donuts. It's 21, I believe. But guys, the idea that I wanted to show you here is that it's easy. Either everything agrees and you take the trade, the advantages are present, or the advantages go away and sit on your hands. That may be the easiest plan ever for trading, right? When everything's perfect, giddy up. When it's not, simply don't. And guys, Gary, this is a great example. I actually took a picture of this one. The smalls are inside of the large, right? It has the potential to go up in this uptrend, but we haven't gotten that best look yet. And then when you couple that loss of momentum, not the best look, with weak triggers here as well, there's those split triggers not working one on top of the other. It becomes a little bit of a challenge and it pushes lower. That loss of momentum, the market pushes lower. And Gary, I actually took a picture of this because I was looking the exact same one that you were looking at. And the triggers are weak. The advantage of momentum isn't present, right? If there isn't momentum pushing up, it makes sense that they may push lower than a seemingly great entry on the 5-1. So guys, if you take a trade like this, if you take a trade and you go back and you're no longer in the heat of the moment, re-annotate your charts. So Gary, you're using that checklist and I love it. And I noticed that you knew that it was anything can happen, right? If you're gonna wave an advantage, recognize it, and then you make the decision. So Gary, great job on the checklist. It was a great read with a lot of potential. It just didn't go. That loss of momentum just pushed it back lower. Nice picture. And then Gary, let's see what we have. Everything says down, everything says go. You got in late, for sure. But with all that momentum and a clear path, it took you all the way to that Fibonacci support. Beautiful trade. Nice NASDAQ trade, Gary. And it's going to become even easier with that 13.2, 34.5. Let me know if you need any help setting that up. And then Mike, absolutely beautiful. Nothing but momentum, right? Nothing but a clear path. Look at that pullback directly to the area of resistance inside of favorable large triggers. And then Mike M, I know that this is your trade, but I'm going to steal it. I'm going to take your trade and I'm going to put it into my spreadsheet. But because I appreciate the effort coming from you, I am going to annotate this one as Mike M's perfect trend trade short. Guys, it is rules based. I could put it up against a checklist and it's everything that I want to do to get into the market. Everything that I want to do to get into the market. Great trade, Mike. Gary, did you click on those zip files to download them? Click the download button for both of them. And they're zipped up, which means that you'll have to extract them. So where it says extract all, and here, I'll give you a quick run. And guys, this is a great reminder that this classroom isn't always just trade setup. Sometimes it may be a little bit of help, and if I can offer it, I will. So under downloads, here's that feature. So if I double click it, see where it says extract all? Which photos link, Ziba? The one this one right here, Mike's trade. So Ziba, all you have to do is scroll up and you'll find Mike's original one and that'll get you the link. I'll give it to you right here though. But just for future reference, anytime you want to steal somebody's picture, and I love that this is a thing, just scroll up. So for example, there's Tammy's. You could click on it and then that'll give you her link to be able to steal it in the future. All right, Gary, are you with me? Extract all. When you click extract all, you have to put it somewhere. So for NinjaTrader 7, If it's a template, you go to templates and chart. If it's the workspace, you just go to workspaces and click select folder and then extract, and it'll put it in there. So you have to pull it out of the compressed folder and put it into the spot where it belongs. Oh, no worries, Zeba. Yep, that was just Mike showing off a little bit, following rules. Great trade. And let's see where we're at. Coming through, looking for pictures. Not a lot of pictures this morning, guys. Maybe you're busy. Alex G posted one in the room. And Alex, let's see what you did. Alex G's been around for a while. Alex G says, Mark, I know that you recognize odds favorable momentum and no termination conditions. And Alex, look at this beautiful pullback. A little early, right? Maybe a lot early. Building that trust, right? Building that trust in the area inside of favorable. And then out a little early, and pretty good. Maybe you were in at 43, $100, $200, $300 trade. Beautiful. And then Alex, here's a great management lesson. Are you ready? When your 13.2 is strong, odds favorable momentum, when your 13.2 has absolutely nothing in the way, when your small triggers are outside of the large triggers and everything on every chart says go, go, go to the downside, man, this is where you can really turn that $300 trade into a $600 trade, into a $700 trade, using momentum, using Fibonacci. This is beautiful, though. What a great trade, Alex. Nice work. And guys, remember, every great entry has a management lesson. So, Alex, I know that you have preset targets right now, right? So here's your annotation. When the large chart has odds favorable momentum and no terms, and the small chart agrees, this is when letting a second contract run works more than it doesn't. Something clever like that, right? So you take it, you annotate it, you share it to screencast because you want to keep that picture forever up there in the cloud, and then come to your spreadsheet and go to management things. And your management things is going to be when to hold for a longer move. And what you'll find, guys, is that when you start taking these great trades, when you start keeping it real mechanical in the beginning, you're going to begin to recognize these scenarios that create. Absolutely. I will always post it, guys. My job is to help you get where you want to be. So everything that I do, all you have to do is ask. I'll always get it for you. You're welcome. And we'll just call it when to hold, right? Now it's in my spreadsheet. But guys, could you imagine, and I know that it feels like work, could you imagine clicking? Okay, I'll get to him, Zeba. I haven't quite gotten to you yet. Is it a tech question? I always go top to bottom. Guys, imagine, even if you didn't take one of these trades, right? But you have 200 pictures where you could just click on one. And you look at the chart and you look at the momentum and you look at the entries and you look at the exits. Couldn't you begin to work on a management plan? Can't you look at entry conditions, look at momentum, look at Fibonacci, and make a decision on where to exit? Get in the habit of doing that. When you get really good at your entries, when you can take that rules-based entry, guys, begin to work on that second piece of the puzzle, that management plan. Dab chain, good morning. Dab, you're wondering if that was a potential entry? So it's a lot of patterns. And Dab, I'm going to give you the answer first. What are your rules, right? I don't know if that's your entry. Do you need odds favorable momentum? Smalls are starting to break below the large, but there's really no momentum there, right? There's no separation. The large are flat. The trend is down. The path is clear. Your synthetics are down. And now your large are down, so your window of opportunity becomes pretty big. So you could have an entry there looking for continuation of that next key area, but you'd be doing it really without the advantage of momentum. Does that make sense? And then two divergences. I love your arrow. See how that divergence high lines up with the mid-band right there at the triggers? Two divergences typically takes out the previous pivot. So when you get that pivot stop out at the potential area inside of the red triggers with everything down, it gives you some opportunity. Does that make sense, Dab? It was close. This is the potentially beginning. Yeah, and it did turn, see? But see how you don't have the advantage of momentum? Did it end up going up? When you say it turned. Yeah, so check it out. Can we use a little bit of chart reading? You guys, this is why I always say, are your rules met? That's not odds favorable momentum, right? That's a flat large trigger and a small trigger that's kind of straddling it. There's another loss of momentum. There's another loss of momentum. So the momentum is gone. And it looks like there was a loss of momentum down here at that lowest pivot as well. So it falls out of that realm of high probability, right? And you can use that loss of momentum to say, well, shoot, if the momentum isn't there, it might push up. Pretty cool, right? Just using the terminology to help make decisions. It's a good picture. And then here is the king of momentum, Ron. Whoops. And I've got drunk fingers, I apologize. Ron, weak triggers, it ultimately gives a reversal. All indicators agree. Momentum is its absolute strongest, right? The path is clear. We're in the momentum phase, and you take a quick... I love that you put the extra tick on for commissions. That's a $220 trade in a matter of seconds. Rain, they're both. Good morning. It's okay to oversleep. Sometimes you have to oversleep. 6 seconds, Ron. That's what we call the rodeo trade. 6 seconds. But everything, look at the advantages. All charts agree. All charts have momentum. All charts have a clear path. Ron just chooses to take a little different entry. So Rain, those ones that I posted are both the workspaces and the templates. And I'm not sure that I'm using it in my own personal trading, but let me show you. If what we're doing is large chart, small chart, right? For the ES, 13.251, because they're a little more well-behaved. Whoops. And then if I go to what's next in the lineup, crude oil, large chart, small chart, 13.251, because they're a little slower, a little well-behaved. And then Rain, here's your NASDAQ, because NASDAQ tends to move fast. It's a 34.5 and a 13.2, but the looks are exactly the same, right? 50-50 trade with divergence, low probability. 3 divergences in the same location pushes it up. Straight to resistance with no triggers near it. There's one of those little 50-50 trades right back. Working on entries, Tammy? I'll help. So Rain, it's the exact same concept of 2 charts, but because the NASDAQ moves so fast, yeah, John figured out a way to slow it down and make it easier on the brain without sacrificing the look that we teach in class every day. I love it. I think it looks great. And I don't know if you guys know it, but I scrolled back and circled tails. And the patterns are absolutely amazing. Yeah, and guys, the cool thing is the NASDAQ moves so much that it just creates more opportunities to take a rules-based entry. Good morning, Debbie. Now it's a party. It wasn't until you got here. So thanks for getting that party started quickly. Let's go through. Who's next? Gary's got a look for us. Gary, pivot from nowhere, right? On that pivot from nowhere, everything says up, everything says up. Interesting entry. There's your pullback to the mid-band at the triggers, like catching a snake today. But when everything says up with momentum, that market goes up. Isn't that incredible, guys? When all charts agree. Ziba, let me look at your other picture and see if I can help you. I can't see what size range chart that is. It looks like that one goes from 52 to 20, so that's a 34 maybe range chart. It's an 8 range. All right, so you pick the 8 range. So your settings for an 8 range, and I don't have any range charts built. But let's go through it. And Ziba, let's do a checklist for you and help out and make sure that we get you. So if you're building a 21-3, I'm going to go new chart. And it doesn't matter if it's the S&P or crude oil. I'm going to make it S&P just because the settings are going to be the same. And I'm going to give you a picture of 21-3. So it should be Nexgen Dynamic Rinko. That's important, right? Making sure that the bars are the correct bars. If you do a minute, a tick, a week, a month, it's going to change it up. So on your 21-3, it needs to be Nexgen Dynamic Rinko, 21 and 3. Chart styles candlestick, bar width is 8. All of these don't need to be changed. You're going to load it back 10 days. And then the template that you're going to use is going to be the 21-3 Rinko. And that's going to be your settings, Ziva, for a 21. And if you're doing it 5-1, 13-2, anything like that, the only thing you have to change is the body style, 13-2, 5-1. And then if you're doing a range chart, again, we have to go to the range bar. If it's an 8 range, your value is 8. Don't mess with any of these. You can give it 5 days back. And then when you're looking for that template, you're looking for 8 range market flow 2003. So if you want to take these settings and compare them with what you have, make sure that you're there. Hopefully that helps you just a little bit as you build those charts. That's for NinjaTrader 7. I don't have NinjaTrader 8 open. But if I go to the user instructions and I go to build a chart, let's see where we are here. It's not different? Okay. But there we have the same rules. Zeba, you are going to be an absolute whiz at this, right? Getting that repetition in. And guys, this class isn't for just trades. But your charts look different. Show me your whole charts. So do me a favor, Zeba. Right-click on your charts and just show me your data series. And let me see if I can recognize something. And I may not. And guys, I hope you guys know this. I'm not a tech guy, but I've had some repetition, so sometimes I can help a little bit. All right, working on entries. Divergence prints, smalls below the large are wide, they're angled. You took the first entry at the area inside of favorable large triggers. Nice quick profits. When this divergence prints, Tammy, I know you're working on entries. When that second divergence prints, especially on a 50-50 trade, it's likely to push higher. No reason to wait, right? Just get out and wait for that higher push. Look for your next best entry. Your second one, great momentum. Everything says down. Once again, it's one of those 50-50 trades. You take the entry inside of favorable large triggers. So Tammy, once again, 50-50 trade, 2 divergences. That third divergence in the same location. Good job getting out without a loss. Good morning, Safia. Beautiful trades, Tammy. The only opportunity that I really see is the same way you exited with that higher divergence. You know, 2 divergences on a 50-50. It may take out that previous pivot. And it gives you a little expectation there. I hope that made sense. And then coming through, here's another one. Odds favorable, no termination, perfect entry, doesn't work. Are you with me for this one? And guys, I want everybody with me for this one. Let's take this picture. Tammy, how'd you feel about this trade? Were you confident coming into it? Cool, let's do it. Is the market coming from a good bottom? It's not, but remember, that's not a deal breaker. Guys, if the market's not coming from a good bottom, it's okay. It increases the likelihood of success when it is, but it's okay if it's not. Did you have odds favorable momentum? Absolutely. No termination conditions, right? Trigger lines broke through. Everything is a clear path. I love it. And look at that perfect area inside of favorable large triggers. Tammy, you had all the advantages except that good top or bottom. This is a beautiful trade. This is a beautiful trend trade. The only challenge, the only thing that didn't checklist was we're not coming from a good top or bottom, right? We're not coming from a Fibonacci area that creates a full reversal. And because we're not, and especially because there's not divergence here, sometimes the market likes to dance a little bit because it's not coming from that really, really key area. I think this is a picture perfect entry. I think it's an entry that I would have taken. I think it's an entry that I would have been willing to lose on. The only thing that I may have done differently is I probably would have kept my stop a little tighter on that window for a smaller loss, right? My window of opportunity, your window of opportunity, it's not mine, it's yours. Remember putting that stop where the market shouldn't go. This is your window, highest to the lowest, right? outside of those large triggers, right there is about where I'm giving it up. Does that make sense? If it doesn't go from 227 and change, and it comes outside of that, I don't want it. I don't need to give away an extra point, hoping that this support outside of favorable large triggers holds. So once again, beautiful entries, great execution. I would take this trade 1,000 times and be willing to lose it, and this is a cost of doing business. That's all it is. This is part of your 20%. And when you put that checklist on it, when you put those rules on it, what it does is it gives you that, okay, I realize this one didn't win, but this is a trade that has been proven to win more than it loses. This is a trade that fits my checklist. This is a trade that has the advantages. I'm okay losing this trade because my execution was flawless. And guys, this is one of the reasons that I encourage you guys to put your losers in the room, because sometimes trades don't work, and it's okay. And Dab, you say you just got a new $150,000 account. You're only going to do trades in the class and post every one of them to tighten you up a little bit. Is that okay? Man, Dab, that's what the room is for. I want you to do that. I want you to only post. I want you to post everything. I want you to annotate your rules, though, right? Guys, if you are looking for help for consistency, writing your rules on the chart is going to give you that consistency, because it's not just me saying, hey, great trade. It's me saying, let's look at the rules. Let's look at the advantages. Let's look at what you did. Did you have a statistical advantage when you got in this trade? And if you did, fantastic. Take it every time. And if you didn't, then we can identify how maybe your rules weren't met. Ron C. Let's see. Momentum. Clear path. Everything says down. Quick money. Oh, and you're holding one. I see you. Entered 4, exited 3. But once again, guys, it's just chart reading. It's super strong, right? The path is clear. Everything's clear. The momentum's there. Quick little run. All 4 out? It looks like 3. Well, I'm glad you got all 4. Maybe the one's behind it. It's a 3 and a 1. They overlapped. That's what it is. Got it. I see it now. That's why it's... If you put save 90 into Apex, it works all the time, not just when they're promoting. That's good. 550 in 8 seconds. It's that damned old rodeo. You and Garth Brooks. Great trade, Ron. Same trade you take every day. Same examples every day. Odds favorable, no terminations, pulled back to the area inside of favorable large triggers, and it just didn't work, Joel. Joel, how'd you feel about it? You feel good about it? With all that momentum? With nothing in the way? With that area for entry? Would you take this trade again? This is what I always ask people. Tammy, would you take that trade again that you lost? Do you have so much trust in what you're doing and the methodology that you can take a loser and get right back into it because you realize losing is a part of trading? And then Joel, again, right outside of that window, man, no reason to give up. No reason to let go of so much. In at 29, you don't have to take the full 12 there. Yeah, beautiful trade, Joel. I'd take it every time. I wouldn't even hesitate. In fact, I'm going to stand behind that. I'm going to put it in my spreadsheet because I love it. You had odds favorable. You had no terminations. Fit your checklist 100%. But I'm going to put didn't work because I think it's important to remember that even when it's perfect, sometimes it's not gonna, right? And I think that's all of our pictures, guys. What's the live market doing? Look at this wonky. Do you guys remember that 50-50 trade? This may be a great time to talk about 50-50 trades. Guys, what does a 50-50 trade mean? It means that the smalls have broken through an area, but the large have not. New users, man, this is going to be such a great lesson for you. Those of you that like to catch every move, this is a great lesson. And Zeba, I just saw your message. Good. Time to follow some rules. You got this. Does everybody recognize 50-50? What does that mean? That means this area hasn't been broken yet, right? It has the potential to break with odds favorable momentum, but it hasn't broken. If I take a 50-50 trade, if you take a 50-50 trade, you're a brand new user and you really want to have the opportunity to win more than you lose, guys, your money is worth a perfect entry on the 5-1. Remember that a medium probability trade says a small issue exists. A small issue, not some small issues. A small issue. Your small issue is that the area hasn't been broken even though it has the potential to break. It's okay to demand that there's a perfect entry on your 5-1, guys. That you have no divergence, that you have strong triggers, that you have a small window of opportunity. As you get outside of those high probability trend trades and this becomes probably your first trade, guys, remember, you've already forfeited the advantage of a clear path. There's no reason to continually give up more advantages. Does that make sense? Guys, give me a Y in the room. For you guys that are looking for the advantages, the best of the best, keeping yourself on the right side of things, does it make sense that if you don't have a clear path, why on earth would you forfeit more? Why would you give up momentum, right? Why would you have a huge window of opportunity with exasperated risk? Trading's about making money. So on this 50-50, right, the area is not broken, but the momentum is favorable. There's your first challenge, loss of momentum. For a lot of you, that means don't take the trade, keeps you out of a loser. You do have strong triggers, but let's look at that potential window of opportunity, guys. That's a big window. My risk, if I use that stamp for the stop, I'm going outside of those large triggers. Look at all of the risk necessary for this maybe trade. Does that feel good to anybody? It shouldn't. You should look at that and say, wow, I'm losing momentum. The area hasn't broken. My risk is monumental. Why on earth would I take that trade? But a lot of you are going to take it. You're going to hope. And guys, hope is one of the worst plans for a trade ever. It really is. 3 divergences, split triggers. Guys, you're in a holding pattern. You're watching a market that doesn't know whether it wants to go up or down, right? Same thing back here, guys. 50-50 trade. Divergence prints. I think you guys took this one. Tammy, let me look at yours. So there's that 50-50. One thing you're not doing, old T-Mier, is you're not running those synthetics at all on your 13-2. Do you recognize that? The only areas that you have are 13-2 areas. Guys, if you're not running synthetics on your 13-2, put synthetics on your 13-2. Draw them in if you need to. Because part of the plan of what Nexgen does is on your 13-2 chart, you've got 13-2 fibs. You've got fibs that come from the 13-2. Those will extend all the way out to the right. But you also have skinny 5-1 chart fibs that don't extend. These are from the 5-1. They're called synthetics because they're from a different time frame, but you also see the 21-3. Guys, and all of these are placed on the 13-2 in the normal workspace so that you can identify them. And I think we already took a picture of yours. And let me show you how it changes the scenario, right? Whoops. At 29.75, there's your fib right there. Do you see it? So now you have a 50-50 from a bad bottom with divergence. Would that have been enough to keep you out of this trade? Joel, would that have been enough to keep you out of this trade? So making sure that you're using all the tools. So Tammy, there's a couple ways. If I'm not mistaken, if you go to the resources page, and I'm fairly certain that this is the case, and you download the indicators, re-download the indicators, like close NinjaTrader 8, overwrite it by downloading the new ones, it should have the synthetics on the 13.2. If you are concerned about the draw on your computer, maybe your video card isn't that great, you're concerned about crashing. The other thing that you can do, Tammy, and I like to do this, and I've done this on mine, is let's say hypothetically, I need to draw in this 29.50 fib, right? I need it to come over. I can just take a drawing tool and draw a horizontal line right over it. And that one quit printing, which is why you don't see it over here anymore. But you see how I can just take that line from one chart and it lines up on the other? So you can do this from your 5-1. You can do this from your 21 and put them onto the 13.2 and kind of draw in the areas. And then Tammy, you know that if the market is trading down to an area, that area is support, correct? And if the market is trading up into an area, that area is resistance. So does it matter if it's blue or red, or if it's hot pink or bright green, or maybe salmon, because people like salmon? Using that recognition of where it's at. And that may help you just a little bit, that awareness. And the reality is even just looking to the right, looking over and going, whoa, I've got Fibonacci there, that if I put it on my 13.2, this becomes a 50-50 with divergence from a bad bottom. But I'm a big fan of having those fibs on there, making sure that I can see my 5-1 areas as well as my 21-3. And they're superimposed onto that 13.2 chart because that's where the recipe price reaches an area where my trigger lines comes from. And guys, there's that termination, right? Right to the termination. Market pulls back. I don't have momentum. I'm losing momentum. My triggers don't line up. Just kind of waiting. Jerry, you went short at a mid-band and a downtrend with a clear path. Made a little money. Nice job, Jerry. Not a high probability trend trade, right? The momentum isn't there, but the path is clear on the pullback. And he's using a mid-band outside. Guys, as you grow with the software, your plan may change. I can't stress that enough. You know how when you do something a lot, you get better at it? Remember when you were 15 learning to drive? And you'd get behind the wheel and you'd start the car and you don't remember anything between point A and B. You don't know what song was on the radio. You're not sure what your dad said to you. It was probably, don't hit that. You don't remember what you passed on the side of the road. You don't know if there was construction. The only thing you were focused on is that one thing, right? Getting to the next spot safely. But now that we're older and we drive, we can change the radio, right? We notice the mountains off to the right. We notice the ocean off to the left. You start to see more and more as you become comfortable with something. Guys, trading's the same way. You're going to begin to see more and more. You're going to be able to recognize opportunities. The more patterns you take pictures of, the more time you spend in the market, the more you post in the room, the more questions you ask, guys, the better you're going to get with what you're doing. So don't be afraid to post everything. Don't be afraid to ask questions about everything. There's that NASDAQ again. Termination condition creates a full reversal. Full reversal gives odds favorable. Odds favorable offers up one of those 50-50 trades. Coming from a strong bottom, the likelihoods increased, right? With strong triggers, the likelihoods increased. With a stacked area and a tiny window of opportunity, the likelihoods increased. Guys, some of you would take this trade with one divergence because of all the advantages. Some of you would say, my plan suggests that I don't. And you chose to skip this trade, and that's okay. But as you go back and you look at it, you'll realize that a strong bottom creates advantages, right? This much momentum creates advantages. Strong triggers creates advantages. A tiny window of opportunity inside of favorable large triggers gives an opportunity to minimize risk. And maybe this becomes a trade that you'll take. Does that make sense to everybody? What you do today may not be what you do tomorrow, and what you do tomorrow probably isn't anything related to what you're going to do 10 years from now. But if you build a solid foundation giving you the highest probability of success, you can grow from it. Guys, that was a beautiful trade. That's a trade I would be very hesitant to miss. But I've been doing this a little longer, right? Split triggers and multiple divergences, guys, this one can go without me every time. Not giving away that many advantages. Guys, this NASDAQ workspace, it's nice. If you go back and you do the same thing you would do on a 13.2 and a 5.1, look at all the movement during the day. Look at all the opportunities during the day. Odds favorable, tail for the continuation. Odds favorable, tail for the continuation. This is still the same day, guys. Odds favorable, tail for the continuation. Odds favorable, tail for the continuation. Again, down here. Over and over. This is only 9:30, guys. Look at the opportunities this market presents. All you have to do is learn the patterns, right? Multiple divergences, losing momentum, 50-50, and it pushes right beyond that area. Holy smokes. It's almost as though patterns work things out. All right, guys, that's the second hour. Look at us trucking on through. How are we doing today? Are we keeping it simple? Embracing simplicity? Guys, are you skipping trades that you would have taken last week? For the NASDAQ, Jose? If you scroll up, I put the zip files in the room. Here. Jose, there's the zip files for the workspace. This is for NinjaTrader 7. There's the workspace. I don't know that I have the NinjaTrader 8 workspaces. I believe that's the NinjaTrader 8. Are you comfortable taking a zip file, putting it where it needs to be? Guys, it's all about finding opportunity, right? Either the rules are met or they're not. Cool. So, Jose, I believe the last one that I put in is NinjaTrader 8. But if you're using 7 for analysis, it's the 2 above. And I don't know that I have the templates. And let me see if I can find them in a conversation with John this morning. And see if I can help out with that one. But that bottom one is your NinjaTrader 8 workspace. And then here we go. Let's see if that'll load in. Did he post it in the traders chat? Cool. You can grab them from the traders chat. I'm looking to try and find those templates in my downloads folder real quick. Here we go. I got you. You found it? Okay. Well, there it is just in case. All right, Debbie, you walked away and forgot to cancel a trade. You wouldn't have taken it at this point. So you were looking for a continuation, right? From a bad bottom? Bad bottom, straight into a termination. Everything's rolling. Everything says down. You take the first shot on the pullback. And then you get paid. But then everything agrees, right? Right here, doesn't everything agree? Smalls down, large down, path clear. It kind of sorted itself out. Large triggers are wonky. Yeah, those are still up, huh? Up, down, yeah. Well, I'm glad you got paid on it. That's the market saying, hey, you know what? Sometimes it's going to be perfect and I'm going to force you to lose. So let me give you one now and then. Look at this, guys. Termination. It's sim. Perfect. Termination to higher divergence to wonky triggers to flat and lifeless, right? The trend is down, but the large are up, but the small are down. Oh my gosh, nothing agrees. Does anyone ever look at their charts and say, absolutely nothing agrees? How do I find an entry? I've done it. Nothing agrees. Can I predict it right and maybe get paid? Oh my goodness. I'm going to give you guys this picture in the room. This is your lesson, guys. This is the most important thing you can learn. Oops, I just killed my ES51, I think. Maybe I didn't. Yep, I did. Guys, I'm going to show you a little trick. If you accidentally close out a chart and you want to save it, watch this, workspaces. I'm going to close that workspace. Do I want to save the changes? I do not, because I made a mistake. Nope. So now that ES is gone without the mistakes. And when I open it back up, when I go File, Workspaces, Open Workspace, and I open up my ES charts, my 5-1 is back. Ta-da! Pretty amazing, right? All right, guys, I'm going to take a few minutes. I'm going to go reload my water. Getting good at you are, Ziva. And man, it's frustrating in the moment, isn't it? Because I've been frustrated. Everybody's been frustrated. But Ziva, don't you feel more confident if an issue presents itself that you're capable of fixing it? Right? I love that. You downloaded how to put them in where? Into the right spots, Gary? Did you extract them or are they just in your downloads folder? So for example, if you double click on it, does it show you the zipped file? Do you see where it says extract all? Give me a Y when you see it. We'll walk through it real quick before I take a break. So you double click. So from your downloads folder, you're like, oh, there's that workspace I want. Double click it. And you see downloads, Nexgen NQ Futures 2023. Don't make me look at pictures. Are you there? Let's see. Come on up, screencast. We'll get you. Guys, I don't mind playing tech to the best of my abilities. I'm not a very techie guy, though. Not going to lie. My brother makes fun of me. He's like, you got to learn this stuff, Mark. I'm like, no, I don't. I have you. I have what appears to be a broken link. I'm going to try it one more time. So you're at the keyboard. Do you see where it says extract all? Because I can't get the picture to load for whatever reason. All right, processing the media. I did. Let me click it one more time. It tells me that it's processing the media and it'll refresh when it's ready. So I think your screencast is taking a nap. All right. So you've already extracted them. They're already out. So you're going to take these two files. These are templates, okay? Templates, go in Documents, NinjaTrader 7, Templates, Chart. So, whoops, it didn't give me the total there. Hold on. So there's your file path for where to put the templates. And then for workspaces, you're going to click on workspaces, and there's your file path for where to put the workspaces. He's only got 3 people in front of you. But you see the workspaces, right? These are your templates. You're good with this? These are already extracted. These aren't. Cool. So do this. Click extract all, Gary. Let me know when you clicked extract all. When you do, it's going to give you this box. Cool? Are you there? Give me a Y. Awesome. So I want you to browse. These are templates. I want you to go to Documents, NinjaTrader 7. Scroll down to Templates. And then Chart. So what you have here is you're telling it to put those files, take them out of the compressed folder, and you're saying put them in the chart folder that's in the template folder that's in the NinjaTrader 7. Give me a Y. So let's do it again. I'm going to browse. I'm going to look for Documents, NinjaTrader 7. I'm going to go to Templates. Double click, and inside of templates, I'm going to double click on chart, and I'm going to select this folder. And then all I have to do is click extract. Give me a Y if you got it. I like doing stuff like this, guys. This is great for everybody. Because I'm not a tech guy, and the only reason that I feel comfortable doing this is because I've had to do it 1,000 times. Even I can be taught. What can't you follow? Put them all right in front of you. Or Gary, just let Jason help you. But you have to extract to the correct folder. I gave you pictures of both of where the correct folders are. So extract and then follow that path to the folder. Did you know that if this is on one screen, you can grab it and slide it in front of you, keep it all? But Jason will be able to get that for you in about 8 seconds. And this is why I'm not a tech guy, because sometimes I probably make it harder than it needs to be. Guys, the S&P is still working itself out, right? Still looking for advantages there. Crude oil has odds favorable, 50-50. There's a divergence, right? Window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Not all of it. So Jose, so from here, Gary, NinjaTrader 7, that's your templates folder. Double click on the templates folder. And then once you double click on the templates folder, you're going to double click on the chart folder, and that's where you're going to extract to. So Jose, templates go to the chart folder inside of the templates folder. And then if it's the workspaces, Jose, if it's the workspaces, it's going inside of the workspaces folder. And guys, remember, it'll say workspaces in the file name, I believe, Jose. So let me find Gary's picture. You have 2 zip files. One's a workspace. One is the templates. You'll be able to see it. It'll say NASDAQ NT7 or NT8 chart templates. It'll say templates. One says main. So main, I believe, is going to be your workspace on 8. Yeah, NQ main zip. Here we go. Hold on. I got it. I got it. Jose, these are the files that I gave you. This is your workspaces. And then there's your template folder. So this top one is going to go in Documents, and then NinjaTrader 8, and then Workspaces. And this bottom one is going to go in Documents, NinjaTrader 8, Templates, Chart. And the same path is true for yours, Gary, for the templates and the workspaces. Does that help, guys? We can fix anything in this room. Look at that. To the tick. To the tick, to the tick, to the tick. Man, guys, if you ever wondered if this stuff works, do a little homework. You will know almost instantly. Perfect. And then just hit select folder, Gary. and then extract. You're there. Nice job. Select folder and then extract. And then we reach that potential termination condition. Lots of opportunities today. Guys, look at how the market, indecision, right? 1, 2, 3 divergences in the same location. Flat triggers, red triggers on a green background. Green triggers on a red background. No triggers through, no triggers through. Man, what a fight between two key areas, and your rules are keeping you safe. Indecision. Look at the fight on the small chart. Your rules are keeping you safe. Keep it simple, guys. Don't be in every trade. Be in the best trades, right? Your money's worth it. All right, I'm going to take just a minute. When I come back, guys, the end of class is yours. I want you to tell me what we're talking about. I want you to tell me what you need help with, and we're going to get you squared away. I'll be back in just a few minutes, and we're going to finish strong. Again, without the mute button on. Sorry, Gary. Just go to Jason in tech. And guys, this is always my advice. If you're having a technical problem, right? If you need help with the software, Jason is freaking brilliant. Really, the only things Jason can't fix are the things that aren't broken. Everything else is pretty much in his realm of expertise. So don't be afraid to knock on his door. You're not bothering him. He's not worried about it. It's what he lives for, is to take good care of you guys. Guys, the S&P is trying to work itself out, right? From support to resistance to higher divergence to lower divergence, right back to support, and absolutely no trigger lines through. We do not have the advantage of a clear path. We are in a downtrend, right? We do have odds favorable momentum, and now there's that big push. The smalls are through, the large are not. We do have the smalls outside of the large. Everything's pushing down, guys. Now the charts are beginning to agree. A little bit of patience, right? Your rules keep you from getting beat up in that tough area. Once again, right to the fib, almost to the tick, and it pushes down, caught in between resistance and support, waiting for everything to agree again to take a trade. And then the same thing here, guys, on the NASDAQ. Resistance hold, the market continues down. Now you get a clear path. And you're just waiting for everything to line up to provide those advantages. All charts agree. Small's breaking below the large, but not through yet. One loss of momentum, but it pulled right back to the area of resistance. We'll see what happens. What do you guys want to talk about? You guys want to talk about odds favorable momentum? You want to talk about termination conditions? You want to talk about right-clicking, setting a limit order right at the area of resistance inside of favorable large triggers when I have odds favorable and nothing in the way. Can you guys hear me? Just making sure. Guys, if you have troubles, if you want to look at NASDAQ, if you want to trade NASDAQ, right? You're like, man, this is going to create opportunities for me. This is going to give me more stuff to look at during the day. This is going to give me more opportunities to enter a trade because the rules are the same. Guys, the patterns are the same. Odds favorable momentum on a 13.2 is odds favorable momentum on a 5.1, right? Termination conditions are a little different because on the 13.2, it is price reaches an area where the trigger line's on a 5.1 when we talk about termination conditions. We begin to recognize that slowdown, right? We begin to see those losses of momentum. So termination conditions are different on a smaller chart than they are on a large chart. Areas for entry inside of favorable large triggers, guys. Whether you're using a 5.1 13.2, whether you're using that 13.2 5.1 on crude oil, or if you're looking at the NASDAQ and you're looking at a 34 13.2, the patterns are the same. The momentum is the same, right? The areas inside of favorable large triggers have to be the same. Guys, that was that one right there. It's all about patterns. It's all about recognition, giving yourself an advantage each and every time you get into a trade. What do you guys want to talk about? You don't have which blue fib, Jose? Daniel, I believe it's 21. I'm not even looking at the ES, Jose. You don't have this one from your 5.1? See how it's synthetic brought over from the 5.1? Are your synthetics on? Okay. No worries. That happens sometimes because I bounce between the three. Sorry, Jose. I'm confusing you guys a little bit. Let's do this real quick. Let's talk entries and window of opportunity, right? Let me pull off all the noise from this S&P chart. Focusing on the study. Odds favorable. No termination conditions. Is everybody comfortable with this look right here? The first two rules are met on the 13.2. Guys, give me a Y if you recognize it, especially if you're brand new. Whoops. My bad. Small's below the larger wide. No termination conditions. Price hasn't reached an area. Jay Solar, I got you in 1 second. As here's the look on your 5-1. Everything says down. Triggers are strong. Reversal bar prints. Your window of opportunity is from that lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. Your job is to develop the trust to take the trade when the rules are met, guys. That's it. That's your entry plan. 100%. All right, Jay, always pushing for gaining full understanding of tops and bottoms. Question, I like it. So let's go through it. When the market goes from a weak bottom to a weak top, right, can we look for an entry for a trade? Great question, Jay. And absolutely you can. And let me go back to my checklist. Are you using this checklist? Whoops, did the wrong one. Okay, cool. And this is, I think, I love this. Is the market coming from a good top or bottom? And first of all, Jay, great job recognizing whether it was a strong top or a weak top. Perfect, 100%. Remember that you can take a trade without it. It's not a must-have, but it's for the absolute best of the best, right? That 5-1 trend trade that happens after a termination condition, that's your best of the best. But if these rules are met, absolutely you can take a trade. That strong top or bottom increases the likelihood of success. And then the flip side of that is that strong top or bottom or lack of a strong top or bottom. Do you see how that 50-50 trade doesn't work out because we came from a bad bottom? Strong tops and bottoms help the chances of a 50-50, but you can always look for an entry on the trade. On this particular trade, there was divergence. So there was divergence on the 50-50 here, and it ultimately pushes down. When you get a bad bottom, Jay, and it pushes up to resistance and it's 50-50, this is what you see a lot, that continuation down to the next key areas. So can you look for an entry for a trade? Absolutely, if the rules are met. Did that help a little bit? Because you're going to get rules met, yeah, even without a good top or bottom. It's just that little extra warm fuzzy, making you feel good about what you're doing. And then Jerry wants to know the yellow and the white bars on the market flow. So not necessarily market flow entry signals, but what do they mean? And I'm going to try and give the simple version. of it. And let me see if I think that I have a range chart. And we'll go through and take a look and ways to use those. Here we go. So let me pull this up. And there's a couple different things that they mean. And it depends on where they are, really. So just on its own, a yellow bar is a reversal bar, right? And it's nothing more, really. It's a yellow reversal bar. It means that the market was going up, it went down, and everything going on said it was going the other direction, and it gives you that reversal bar. Sometimes it's a 1 bar up, sometimes it's a 1 bar down. But you'll see these at key points in the market, and that's where I like to use them. So for the reversal bars, if I get, for example, one of these reversal bars, and I'm trying to find an example of it, and of course it's going to make me work for it. A reversal bar at an extreme. It's just not going to give me one, is it? There we go. So a reversal bar at an extreme. Maybe it's Fibonacci support. Maybe it's an area likely to hold. Or even more so on that 8 range chart, Jerry, if it's coming from an outer band. If the market has moved all the way to an outer band and it gives me one of those reversal bars, it's a pretty good indication that the likelihood of a top or bottom goes up. And that's the first way that I'll use it. The white bars are what we call breakout bars. If it's coming from a reversal bar, Jerry. So for example, I get a reversal bar at a key area, and then the white bar breaks out. This is your breakout bar. This is where the highest concentration supports the reversal bar. And then these breakout bars create your HVA lines, which is that highest concentration of sellers from a reversal bar. And you can use these breakout bars, these white bars, to help identify when the market is changing and when kind of that line in the sand has been built. A white bar standing alone at an extreme happens a lot at top or bottoms. But without rules being true, they're just bars, because you're going to get reversal bars all the time, right? You're going to get white bars all the time. But if they're not coinciding with a rules-based program, with, for example, if all the rules are met, this reversal bar may be a confirmation for a short trade. But this reversal bar up may not be any much as value as this reversal bar down if the rules aren't met. Does that make sense, Jerry? Does that help a little bit? And guys, I just got kicked out of the class. I'm going to come back to you right now. Everything begins with market flow from a point of, are the rules met? And then you get the reversal bar markers at extremes. It can be a little bit of a confirmation. Or you can do the white bars after reversal bar, letting you know that not only did you get a little bit of an extreme reversal, but also a breakout from that reversal. And then the final way that I use these bars, if a white bar, and Jerry, let me give you a trick. I know that you've been around long enough to know MB. When the rules are met and you get a white bar into the area you anticipate holding, a lot of times it'll generate that signal, that arrow. But one of the best things that I ever heard is if you're looking for a short trade, for example here, and that white bar attaches itself to the small triggers, which are strong and down, and the rules are met, it's a big indication that that's going to be a little higher probability. And then, of course, I always direct you guys. It's hard to teach market flow in a couple sentences. Go through, watch that video. That's it. That's not that one. But John's got a video on that market flow where he really goes through and starts talking about it. No, areas aren't entries unless the rules are met, Ziba. And I think that's the challenge. If your rules aren't met, it doesn't mean anything. if your rules are met and you're using it for confirmation, well, then those areas become a little more helpful. And then guys, right from Discord. Yeah, absolutely, Ziva. And right from Discord, there's the whole section helping you reading those market flows. And John put this in recently, and that's a great one to supplement after you watch the videos. Yeah, it's great, right? But it's too much for a new user, I think. Keep it simple at first, guys. And then Jay Solar, you were looking at the chart I posted from a few minutes ago. Here it is. You're wondering if a bounce from a fib to an entry area is solid as a bounce from any other area. Try and get that picture up. How do you know if we're not seeing a reversal instead, since it comes from a termination condition and triggers did not go through? You don't. Jay Solar, that's a great question. But you don't. You don't know if it's going to be a reversal or if it's just going to be a bounce. You have absolutely no way of knowing, right? Guys, I think this is a really key concept. You don't know if it's a reversal or if it's just a bounce. You don't know if the market's going to go up 1,000 points. And I can't get that link to work for some reason. Whose picture was it? Maybe I can get it to work from my end. And guys, this is why I always defer you back. No matter what we talk about, I go into, are your rules met? And if you try to keep it simple, if you allow it to be simple, you don't start going, well, this bounce is from this area, therefore it's more powerful than this bounce from that area. I know that you guys lost me. I'm coming back to you right now. If you don't say things like, well, this one's from a fib, but this one's from one-to-ones, and this one is from this, and that one is from that, and you just simply say, do I have odds favorable momentum? And if you do have odds favorable momentum, well, then look for no termination conditions. And if you have no termination conditions, look for that area inside of favorable large triggers. And I'm going to try that link one more time, Jay. There we go. It's coming up now, I think. No, it's not. It's like it's stuck. Let's see if I bring it out, if it goes. Do you want to try one more time? It might be screencast, not you. But does that make sense, guys? You don't know if you're seeing a reversal, and you don't know if it's just going to bounce and continue through. You have absolutely no idea, guys, because we can't tell the future. If we could, none of us would be here. We'd all have the winning lottery tickets. But what we do know is that when the market reaches, and this is a good picture that gives the example, Jay, price reaches resistance and it bounces, right? And that's awesome, but it bounces right to another key area. And none of the trigger lines go through. And I'm pretty sure this one ultimately goes up further. I don't know if this is going to reverse the market completely. And I don't know if this is going to stop the market. So I default back to my checklist, because this is the one that creates the advantages. Did that answer it, or did that go kind of roundabout? I didn't want to go roundabout. But I guess the short answer is I don't know. I don't know what the market's going to do. I never know what the market's going to do. I know the patterns that give me advantages, but I never know if it's going to be a reversal or if it's going to ultimately break or if it's just going to dance in the area for 3 hours. So I always resort back to, are my rules met? Well, you didn't show me an entry area, Jay. Let's be honest here. What you showed me, or what you asked is it okay to look for an entry? Is it okay to look for an entry where? Is it okay to look for one here, for one here? And the answer is yes, if the rules are met, right? From a weak top, if the rules are met, absolutely. From a weak bottom, if the rules are met, absolutely. No worries. If you'll try, well, I'm sorry, I know that there's a technical issue coming through. And while you find that one, let me see Tony's question. Looking don't cost nothing. Amen. Can you talk about strength of trend when synthetics are above the large triggers? You see momentum slowing on the 13.2 with the direction of both synthetic and large triggers are still up. So absolutely. Tony, obviously in this picture, you're talking about the strength of a trend, right? But we're straight into termination conditions with weak triggers. So it doesn't matter that everything is up here because the rules aren't met here. Give me a Y if you're cool with that. And when we talk about strength of trend, let's define a strong trend real quick. So for me, Tony, a strong trend is defined, a strong uptrend is like 30 bars in the same direction or 3 Fibonacci areas broken. That's a good basis. A strong trend, and I don't think we've had one today. We really haven't had a strong trend today. Well, and that's a 50-50, right? But it's not a strong trend because the trend has already changed. This is a weak bottom, odds favorable, and I'm not sure where your entry was, but it was right here. And it looks like you got in a little bit and then you got stopped out on that 50-50. I don't know what's happening. And you're talking about this right here where everything is up and the path is clear, right? But you have kind of weak triggers. So, okay, I'm with you now, and it took me a second. And Jay Solar, I haven't forgotten about you. See if you can find that picture or let me know who it was. And I need both charts to be good with that one. So let's break it down like this. And Tony, this is how I look at it. And hopefully this will be helpful. So, oh, the flounder are biting. Yum. Man, have fun. Go catch them. I love flounder. Put some on ice. Send it to the Pacific Northwest. All the fish here is dark and dreary as the weather. It's weird. Tony, maybe this will help a little bit. So let's look at what a trade is, right? Momentum, clear path in an entry area. And I try to have everything from that basis. So what do we have here? We don't have momentum. Agreed? And this is what you're talking about when the triggers are weak. So let's go back to the rules for a medium probability trade, or what a medium probability trade means. It means a small issue exists. So Tony, your small issue is momentum. You still have a clear path, right? And you still have strong triggers, and you still have an area inside of favorable large triggers. So your one issue is the momentum, and if that one issue is present, isn't it okay to take a medium probability trade? And then you just manage assertively. It took me a second to get to where you were, but I think that's exactly what we're talking about. If you give away one advantage, make sure that you don't give them away, but then it's medium probability. So what you're looking at here is just that. You've given away the advantage of momentum, but you do have strong large. The smalls are up. The path is clear. The triggers are overlapped one on top of the other. There's nothing in the way, and you have an area right there inside of favorable large triggers. Do you feel like that's enough advantages to take the trade and manage assertively? I would agree, Tony. And that's where it's medium probability. But let's say hypothetically, you've given away the advantage of momentum, but then your area is well below large triggers. Are you willing to give up rules 1 and 3? Or you had 3 divergences. Are you willing? And there, so that's the answer, I think, is with one advantage gone, insist on the other 2. That's kind of what I think. But understand that when you forfeit an advantage, it becomes medium probability, which means that you have to be like on your guard, right? You have to be ready to manage that trade. Hopefully that answered the question all right. All right, Jay Solar, this is the S&P. Okay, so let me find this in the actual market at 1117 in the S&P. There's my circle. Okay, so here's where the confusion came in, Jay. No, it's okay, I got you. So when I made this circle, and let me show you what I did, Jay, because we were only talking about entries when I was doing this one. So I had gone to a 2 trigger only look. So this one didn't have all the information. This was just an opportunity to see how an entry looks at that pullback to the area inside of favorable large triggers. And what you were looking at was my identification of the window of opportunity. Does that make sense? But then when we put the indicators back on it, sorry, that was confusing. You probably walked in and missed the part where you couldn't see. But do you see how price reached support and absolutely no trigger lines went through? Total termination condition, right? So even though everything is down, even though it's odds favorable, this is a trade that has the exact same potential to do exactly what this did or do exactly what this did. The path isn't clear yet. The fact that it goes through it doesn't matter because that advantage is gone, right? And guys, now we have that 50-50 from a bad bottom, pulls right back to support inside of favorable large triggers. This is that medium probability, right? Guys, can you see how the market can't figure out what the hell it wants to do? This is a 50-50. It has no divergence, it has strong triggers, and it has the tiniest little window of opportunity. If you entered at 18 1/4, guys, you're managing assertively. You're playing if-then. If divergence prints, do you really want to be in a 50-50 from a bad bottom? If your rules say that you won't take a 50-50 trade with divergence, that becomes a management opportunity. What if this divergence never comes true? Well, then you don't have to manage it, right? Then you're looking for your target at 23.50. Does that make sense? And Jay, did that answer your question? And the answer always goes back. Even if it's from a great top or a great bottom, still always going to go back to that checklist. Always go back to making sure that those advantages. So just a great top doesn't mean that a low probability trade will win. Just a great bottom doesn't mean that these resistances will miraculously break. It's only one element of 4. And when it's present, it creates more opportunity. When it's not present, it still can be a great trade, but the rules, even more so, you really want them to be met. Does that make sense? I think that was a great question because I see a lot of people trading into termination conditions just because there was a good bottom or just because there was a good top. So guys, if you were in because of no divergence, right? because of the pullback to the area. You're just waiting. You're saying if divergence prints, I'll exit the trade if that's your plan, right? Divergence will be true right here at about 1750 if it becomes true. Because we're not coming from a good bottom, because we're coming from the middle of nowhere, these 50-50s are less likely to work. Doesn't mean that they won't. This whole market could completely reverse and go up to 5,000. I don't know. But everything is about advantages. If a divergence prints on a 50-50 from a bad bottom, then I've lost more advantages than I'm willing to give up. If it never prints and I'm already in this trade, maybe I already took quick profits at the trouble spot. It's not a lot of money, but it's a little in the bank, right? And I've got my stop where the market shouldn't go, or if the conditions met. And guys, this is just potential. That negative number doesn't mean that divergence is true. It means that it has the potential to be true, which means I'm on my guard. I'm not running to the bathroom. I'm not going to make a phone call. There it is, guys. Divergence is true on a 50-50 from a bad bottom. Do you see how that management is nothing more than if-then? And that's all it is, guys. Everything that you do revolves around if-then. If I have momentum and a clear path and an entry, then I take a trade. If I don't have momentum, a clear path, and an entry area, then I don't take a trade. If my rules are met, I take a trade. If my rules aren't met, I choose not to take a trade. And then I took a picture of a 50-50 trade earlier, guys. $50-50, good top. If I enter the trade, if second divergence prints, I'll exit the trade. If second divergence does not, I'll exit at the first trouble spot and break even, guys. When I get into the trade, my if-then scenarios are already in place. My if-then scenario kept me from taking a full loser, guys. Small losses are going to happen. If you go into every trade because the rules were met, then you have advantages. If you exit a trade because the rules are no longer true, because something happened, then that's pragmatic, right? And a lot of times, that was a 2-lot. Guys, that's a $60 loss. That's pretty easy, especially when my winners are $200 to $300. Small losses are a part of it. Your ability to have that plan in place is going to help you, right? Everything is a matter of if-then. Does that make sense? If the rules are met, get in. If the rules aren't met, sit on your hands. Go make a sandwich. If the advantages are present, take a trade. If they're not present, stay out of the trade. Or if they're not all present, Tony, right? Manage your trade. Look at that, guys. 50-50 with divergence. Pushes you below that window of opportunity. Probably takes you out of that trade. If then, if I took that trade, smalls working their way inside of the large. Smalls working their way inside of the large. Divergence prints. What advantage are we giving away, guys? Rule number 1, right? We've given away the advantage of momentum. Even coming from a good top, we've given away the advantage of momentum. And look what happens. Loss of momentum, the market pushes higher. Why do we get in at the tops and bottoms of the windows? Because the momentum is its absolute strongest. Our momentum is not its absolute strongest. The market pushes higher. It's trying, isn't it? It's trying to figure out what the heck it wants to do, guys. This is the NASDAQ. Man, there's so much movement in this market. 50-50, right? But we're above every area. Weak triggers. You're giving away the advantage of momentum, but you have that clear path and it pulls right back. And off it goes to the races. Guys, I think it's been a good day. We've talked about advantages, right? We've talked about large chart, small chart, keeping it simple. We've talked about clear paths. Guys, all you have to do is study. All you have to do is scroll back, circle those tails, develop trust, post it in the room, ask a million questions. If I ever seem put out by your questions, guys, call my boss. Work those advantages. Look at how this doesn't match. Right, guys? One's red, one's green. That doesn't match. Synthetics are down, large are up. That doesn't match. It just means that there's no trade no matter what happens next, guys. Unless you have rules that say when everything is crazy, I'll take a trade. You've got extra lines. That's the S&P. This is not the S&P. You know that, right, Finman? This is the S&P. That's okay. That's twice today. So NASDAQ and the S&P look a lot alike. They really do. But yeah, that was a NASDAQ chart that we were looking at. We weren't looking at that S&P chart. But this is my S&P right here. You have a fib there, right? You have a synthetic. Let's look at it real quick. But it is a synthetic. It doesn't extend all the way to the right. So what you're doing is you're looking at a fib from a different chart. And that may be, let's see, 22 is the fib. It may be a 21 fib that you're looking at, right? So you're running synthetics on your 5-1. Not running the synthetic. Oh yeah, there's a 21 at 19. One of us may have a little corrupt data. So this is where I always ask, do you delete the cash in the tick every morning? Yeah. Are we on the same time frame? We are. We're in the exact same time frame. The next thing, yeah, I am too. The next thing that I ask, I've got like this little checklist that I go through my head when we don't line up, is you should be do not merge. So let's go to building new charts. Making sure that we have, and guys, it may be me. Yeah, you've got the same one coming across, which is great. It kept you out of the trade, right? You didn't even think about the 50-50. So that one worked out. And that's your 13.2. That's your 13.2 fib coming up. Guys, it may be me. I'm not going to lie. You took it into the termination condition from a bad bottom? Brave, Jose. Brave, brave, brave. It depends. I put 7 and 8 up there, Safia. So it depends on which one you're talking about. I believe those are 8. And that'll help. Guys, I'll tell you what I'll do today is I'll go through and I'll clean out my database and I'll make some new workspaces. So tomorrow when I come in, I'll be 100% fresh and ready to go. And then if we don't match, it might be you. But right now I'm not ruling out the possibility that it may be me. I haven't built new workspaces in a while. Those are NT8, Tony. You're welcome. Do you want 7, Tony? Or are you doing everything on 8? Okay, those are 8. And guys, the rules are the same. I can't stress that enough. The rules are the same. I believe so, Jose. I believe it's a 21 range on NASDAQ. And there you go. Thank you, Rain. Guys, there are the new workspaces for 8 are downloaded on the resources page from John. So you'll have it right there. Oh, and then Gary, didn't work. You bet, guys. And remember, even though this classroom's over, the traders chat's still open. So you can go over there and ask, and then perfect. Gary, you got it. Nicely done. I knew you could. Guys, great class today. Did I answer everything before I go? It's not my server, Rain. I just teach. Maybe everybody was doing it at the same time. I don't know. Maybe it was a holiday. Everybody's watching basketball. So, guys, remember, if you need tech help, I'll do everything that I can that I know how to do, but Jason's the smart guy. If you want to learn how to read indicators, I'm your guy. I got you covered. Guys, have an awesome afternoon. It's Tuesday. I know that now. Go do something fun. Go download some replay data. Study some patterns, guys. Talk about advantages. Convince yourself that the only way you're getting into a trade is if the rules are met, is that if every chart agrees. And gosh, life's going to get so much easier for you. I promise. There's no way that it can't. And then, guys, I will see you tomorrow morning, 9 a.m. We're going to do it again. If you market replay tonight and you have questions about something that you saw in market replay, don't be afraid to bring it to class. If you're like, I thought I knew this, but I don't, I need some help with it, bring it to class, guys. This is your class. I don't care how long you've been with Nexgen. I don't care if you're on a demo, if you lease, if you own. This class is developed and designed to help get you where you want to be. So don't be shy, guys. Be stingy with the time in this class. Pretend like you're the only person there. And I'll see you guys tomorrow morning. I hope everybody has a great afternoon. Take care. No traders chat? There should be, Joel. It looks like it's going. That's traders chat. And Joel, you should have access as an owner. Maybe it got lost in the mix. See if that link will take you to it. And guys, I will see you tomorrow morning at 9 a.m. I hope everybody has an awesome afternoon. Be good, guys.